This article comes from CNBC. Block shares plunge 15% after short seller Hindenburg says Jack Dorsey's company facilitates fraud. Shares of Jack Dorsey's block plunged nearly 15% by Thursday's close after short seller Hindenburg Research announced that the payment company was its latest short position, alleging that block allowed criminal activity to operate with lax controls and highly inflates Cash App's transacting user base, a key metric of performance. Now, Hindenburg is a famous short seller. Obviously, they shorted the stock before reporting this particular, we'll call it allocations at the moment, and they're up a pretty penny. Hindenburg describes Block's internal systems as a Wild West approach to compliance. So I'm just going back all the way down to, I believe, where Block responds. Block responded to the Hindenburg report late on Thursday. We intend to work with the SEC and explore legal actions against Hindenburg Research for the factual, inaccurate, and misleading report they shared about our Cash App business today, the company says in a press release. So let's go to Block, aka Square, and the chart is already marked up from, I think I did a full-blown video 1 month ago. Okay, so let's figure out if we can piece the puzzle together. Alright, so the red rectangles represents weekly buyers or sellers. Alright, so I think this was a flip zone. Let's go down to the weekly chart. Before we do that, I think I marked off the high and the low. You know, if you want to say the football field that price was playing in. Alright, so I'm curious about this red triangle. Alright, so if we go to the weekly chart, yeah, even though I did not mark it as weekly buyers, this was the zone that caused the buyers to shoot price all the way up, right? Because it took out the previous high back in September of 2018. So when it did come all the way back down, it did shoot up roughly almost double. Price could not get up to the weekly seller zone. This was a beautiful weekly seller zone that is still valid because price never reached back here. Alright, so let's try to break down all this gibberish right here. Let's go to the daily chart. And I think in the previous video I said mid-February. That would have been around here, I guess. Right. Just say if price was here, it did pull back right to a daily sellers zone at $83. But price eventually breached the uptrend line, the daily uptrend line, invalidating that price was continuing to move higher. You can see since then, price was in a nice channel. We'll make that orange. Price was in a nice channel on the breach of the uptrend line. Price pulled back up to the upper trend line, and on the news, price collapsed. Alright, so let's take some things off the chart. We'll leave this there for now. I'm going to remove this uptrend line. Alright, so again, if this is the football field, price is between 50 and 91. So we're going to say mid-court midfield is roughly 70 right there. We'll make that white. Okay. So price is below midfield. It's on the, okay, so we'll say the cheaper side of this range. So it's closest to selling at a discount. If this is wholesale prices or expensive. So based on the dip, um, it might present a buying opportunity. Not right now, but um, in the near future. So if we divide this chart into quadrants, right, what we can say is that um, the middle quadrants price would be at equilibrium. There is no imbalance between buyers and sellers. You could say down here, price is at a discount. Up here, price is expensive. So let's just put that in discount. And what's funny was I was showing my son how to just quickly assess Bitcoin to figure out whether it was expensive or cheap. And this is kind of use this quick pictorial analogy to describe it. All right, this is expensive. So like anything in the real world, you would never buy something when prices are high. You would wait until it's on sale or selling at a discount on the discount rack, right? So trading is no different. However, we do the opposite of what we do in the real world. We tend to buy when prices are expensive because of fear of missing out. And when prices are crashing, we say, oh no, and we get out. Where the smart money is on the other side of our trade because they see price selling at a discount. And that's how trading works. Trading is a zero-sum game. The smart money is always on the other side of our trade, and we have to start thinking like the smart money. Buy low, sell high, not buy high and sell low. Alright, enough of that rant. So I'm going to back out to the weekly chart, and I want to look at this area below the one end zone area, and that's going to be back in April of 2020, which was the pandemic lows. Alright, so I'm going to go to the daily chart, and I'm just going to zoom all the way to the left to see if I see an area of any interest here. Okay, let me zoom out to the monthly chart for a second. Now you know there are buyers down between 30 and 50 based on these wicks. Just a matter of trying to figure out what level to establish a level to buy at. Alright, so I'm going to go back to the daily and try to decipher this. You have a W pattern, which is bullish, which was a reversal pattern, which caused the price to reach all-time highs. I'm going to go down to the 4-hour chart. Still don't really see anything. I'm going to go down to the 1-hour chart. Maybe this level here had a gap up, price pulled back, couldn't close the gap. That's at 40. I did say between, I guess, 30 and 50. Just mark that. Okay, go back to the daily chart. what is this area here? We have a wick over wick. Let's go down to the 8-hour chart. Since I was in trading, if you like doing surgery, you look at many pictures to find the picture that you need to diagnose the issue, to come up with the solution. No different than trading. Yeah, this is a tough one. I like this area. So it's at 32. Now I don't anticipate price getting down this low. Let's see if that. Oh, see that hit. You see that? See, this stuck out to me like a sore thumb, because but price hit that level already. We're going to keep it on the chart. Alright, let's go back to the daily chart. Now price is all the way at 60. I'm going to keep 30 on the chart. That'll be the extreme lows that I would anticipate price getting to, but huge buying opportunity if it ever did get back that low. In the meantime, we have to play within the playing field. Again, 50 is one end zone, 90 is the other end zone. I'm going to set an alert. I'm going to set an alert at $52. Again, price may not get down that way. But if it does, then we could potentially look for a reversal pattern to take it long. Anywhere down here, again, it's at a discount. However, you want to wait until the dust settles, see what happens between Hindenburg and block's response, and then kind of act accordingly. Price is below the 200-day moving average, so that's bearish. However, you did have a golden cross where the 50 crossed over the 200-day, which is bullish. So, the chart is right now indecisive in terms of direction, but potentially price will be selling at a discount as confirmation take it long, as price, if and when price continues to decline to the bottom of the one end zone. Thanks for watching. Subscribe. Hopefully you like the football analogy. Leave me a comment and like the video.